Welcome back. We are back with Kash Pashootan. He's our featured guest here on the street today. He's also CEO of First Avenue Investment Counsel. This time to Kash to talk about how you see the market playing out in 2025 and what you've got a list of factors that you think could contribute to an extension of the bull market and some risk factors, of course, as always. One of the bull market factors you see is a sustained strong performance in leadership sectors of the economy and market.
That's right. Yeah, in the U.S., Paul, let's not forget whether it's technology, EV vehicles, e-commerce, AI, the U.S. is a leader in all of these spaces. And let's face it, that's where the action is. That's where the growth is. And so from that perspective, it's certainly very opportunistic for the U.S. when we think about where the growth drivers in the economy and jobs and businesses are. The U.S. is front and center on all of those factors.
And what about the we just talked about the regulatory environment in banking. What about the political landscape in the U.S. and the policy landscape?
Sure, yeah. I mean, I think in terms of the positives, in addition to the U.S. being a leader and where really the job growth and overall business growth is, we see the environment in 2025 loosening up from a regulatory perspective, and also not just from a regulatory environment, but the new administration is very pro-business. So, I mean, you've already seen it with how proactive President Trump has been with attracting foreign capital, right? I mean, he's basically running a campaign. If you invest $1 billion, we're going to do all sorts of great things for you. And you have leaders from different countries, whether it's Asia or the Middle East. I mean, I just saw the Middle East announcement, $20 billion, a business group out of the Middle East investing $20 billion in the United States. So he's very pro-business, which is also going to be positive. I think the other factor that's positive for the markets and economy going into this year, we know that the banking sector is really the pillar, one of the main pillars to economic growth. And last year, the banks had to put a lot of money aside to account for loans going bad because of higher interest rates. I think that this year you're going to not only see that capital that they're putting aside that they could not use for growth initiatives peak, but also actually loan loss provisions start to come down. So that's also we see it as being very positive.
What about the theme of central bank easing? What has happened to that theme? The market has had to dial back its expectations of rate cuts in 2025.
Yeah, I think we would have liked to add another sort of point on that list, which is we're going to see big rate cuts this year. And as you said, that narrative has changed as we've gotten more evidence, more in the U.S. than Canada. I think that I would still expect rate cuts here in Canada compared to the U.S., where it's a very different story. But overall, one thing that's positive both for Canada and the U.S. is that there's no view that rates are going higher. And that's been different than what businesses and consumers have faced the last few years.
And finally, as we see on the bottom of the screen, you believe that M&A activity will pick up in the U.S., correct?
Yeah, definitely. And we talked a little bit about this earlier, but the fact that there's clarity now on where interest rates are, because let's not forget, in M&A, cost of capital is a big part of it. And so when you have private equity firms going in to finance a new acquisition, the cost of capital really determines what they can pay. Lack of clarity of where cost of capital goes is what causes these firms to hit the brakes. Today, we have clarity on where interest rates are, and in fact, they're easing from the high peak levels. So that will certainly provide some enthusiasm, and that clarity will. There's a lot of money on the sidelines. We think we'll go to work in the M&A space.
Okay, risks. You think inflation risk is one, and a lot of people are talking about this, including Jamie Dimon. Just this morning, Jamie Dimon says that ongoing and future spending requirements, he's talking about government spending, will likely be inflationary, and therefore inflation may persist for some time. How much of a risk is that to the market outlook?
Yeah, I agree. I mean, I think in the U.S., Paul, inflation is actually being understated in terms of a risk for 2025. When you look at the negative side of being very pro-business, which the U.S. is, the negative side of it is that it is inflationary. You're encouraging growth, and that causes inflation. So I think the inflation risk is a very real risk. Everything that I look at the U.S. doing is inflationary. So in the U.S., I think inflation is a much bigger risk than when we think about Canada. In fact, Canada has the risks in 2025 actually vary quite a bit in Canada compared to the U.S. In the U.S., I think inflation is a big risk. I think the other risk in the U.S., and this is more in the market as opposed to the economy, is that there's such a concentration risk for the U.S. market as it pertains to the Magnificent Seven. So we know the S&P 500 has a phenomenal year when those stocks are working, and it has a double-digit negative year when they're not. And so given that they're coming off of essentially two very strong years, it's not unreasonable to expect that this year might be a year that we get some pullback or a bit of a correction in that space. Those are for the U.S. I think in Canada, we're dealing with different risks.
Right. You see the possibility of a Canadian recession.
Yeah, in Canada, I think the two biggest risks are recession and the tariffs. So I think the Canadian economy is arguably in much worse shape than the U.S., and not because of household debt levels being way higher than the U.S., but I just think, to be frank, the U.S. gets the urgency and the need to stimulate their economy, create jobs, and provide growth more than Canada does. So I think that time is a killer when you're in a slow environment, and we're definitely in a slow environment, and there isn't really any catalyst to get us out of that. So I do see, I think we are in a recession, in fact, and I think that that will be evidenced further in upcoming quarters. And then the tariffs, this is a big deal. It's, when you look at the percentage of how many Canadian businesses are selling to the United States, 25%. I mean, many businesses don't even operate with a 25% profit margin. So the math just doesn't work if that number comes in.